Ladies and gentlemen, good afternoon once again. May I introduce you to the management team from Maruti Suzuki. Today we have with us our CFO, Mr. Ajay Seth, Executive Director Marketing and Sales, Mr. Shashank Srivastava. From corporate, we have Executive Director, Mr. Hideki Taguchi, and Executive Vice President Corporate and Government Affairs, Mr. Rahul Bharti. From finance, we have Executive Vice President, Mr. Pradeep Gaur, and Vice President, Mr. Sanjay Mathur. The Concall will begin with a brief statement on the performance and outlook of our business by Mr. Seth, after which we will be happy to receive your questions. May I remind you of the safe harbor? We may be making some forward-looking statements that have to be understood in the conjunction with the uncertainty and the risk that the company faces. I also like to inform you that the call is being recorded and the transcript will be available at our website. I would now like to invite our CFO, Mr. Seth. Over to you, sir.
Thank you, Nikhil. Good afternoon, ladies and gentlemen. Financial year 2019-20 began amid considerable challenges with sluggish economic growth in India and the world. In India, the issue of inadequate credit availability driven by challenges in the financial sector was one of the important reasons for moderate economic expansion. Consequently, the slowdown in consumption affected the overall demand environment and investments in the economy. To bolster the economy, both the Government of India and RBI took some bold measures. With significant measures, the economy started to show early signs of improvement in the later part of financial year 1920. However, at the end of the year, the outbreak of COVID-19 brought the economy to a screeching halt. For the auto sector, the financial year 1920 can best be summarized as the year when all negative factors struck simultaneously with full force. Over the last 2 decades, the auto industry has not witnessed such a huge demand contraction. The slowdown was broad-based, with all the segments of auto industry witnessing significant decline. Major factors which affected the sales were as follows: increase in selling price due to introduction of regulations, increase in insurance vehicle premium, and increase in road taxes in some of the states affected the demand, especially of entry-level cars. Issues related to vehicle financing like credit availability and increased down payment requirements also affected the demand, especially when over 80% cars are sold on credit. Uncertainties in the mind of customers like anticipation of GST rate reduction, dilemma to choose between BS4 and BS6 technology, expectations of fire sale of BS4 vehicles, etc. kept customers deferring purchases. Slowdown in rural economy also contributed to decline in sales of passenger vehicles. At the end of the year, COVID-19 related disruptions brought down the sales to a halt. Amid weak market demand with fewer walk-in customers to the showroom, the company increased its efforts to reach out to customers. The targeted digital campaigns through hyper-local activity were stepped up to identify potential customers. The inquiries for new car buying through digital platform witnessed multi-fold increase during the year. Given the issue in credit availability in both working capital financing for dealers and retail financing for consumers, the company established tie-ups with leading scheduled commercial banks, NBFCs and regional rural banks in order to ensure the credit availability at competitive interest rates with low down payment requirements. The company tied up with 13 finance companies like Bank of Baroda, Kotak Mahindra, HDFC Financial Services, Federal Bank and Tata Capital. Besides, the company successfully managed the transition from BS4 to BS6 vehicle technology. Given the wider portfolio of the company, the introduction of BS6 vehicles had to be done at the right time with meticulous planning in order to ensure that the dealer partners were not burdened with any unsold stock of BS4 vehicles. The company has sold around 8 lakh BS6 vehicles during the year. In a weak demand environment, it is necessary to create excitement in the market by offering new products with relevant technologies with the support from Suzuki Motor Corporation in providing the necessary platform and powertrain technology. The company launched 2 new models, XL6 and Espresso, just before the festive period in order to cater to the growing interest of consumers in the UV space. The company launched its flagship model Vitara Brezza with a bigger engine and a host of other features. This created excitement in the market and helped improve sales. The shift towards petrol vehicles is more evident now, with share of diesel vehicle for the industry, falling from 20% in quarter 4 2019-20, falling below 20% in quarter 4 2019-20. For the company, the contribution of sales from petrol vehicles stands at 93% in quarter 4 2019-20. 7 out of the top 10 best-selling models in India came from the company. Maruti Suzuki has been leading the green mobility initiative in India by providing the factory-fitted CNG technology during the year. While overall sales of the company in domestic market declined by 18%, the CNG sales grew by 1%. This clearly indicates the growing interest of customers in CNG vehicles. On export front, the company exported 1,02,171 vehicles to over 100 countries, registering a decline of 6%. The economic and political uncertainties and increased protectionism in some of the export markets affected the sales. Both domestic and export markets put together, the company registered an overall volume decline of 16.1% in financial year 2019-20. Being capital as well as labor intensive, the passenger vehicle industry has higher fixed costs, and capacity utilization is one of the important levers for profit margins. With a decline in volume on one hand and capacity addition on the other, the capacity utilization fell much below that of the previous year. Weak demand condition kept sales promotion expenditure at an elevated level. These two factors, that is reduced capacity utilization and higher sales promotion expenses alone, significantly impacted the profit margins. Moreover, due to weak market situation, the company could not take adequate price increases to neutralize the increase in input costs. The company could partially offset the impact of unfavorable factors by stepping up cost reduction measures. The company sold a total of 15,63,297 vehicles during the year, lower by 16.1% over the same period previous year in the domestic market. In the domestic market, the company sold 14,61,126 vehicles. Exports were at 1,02,171 vehicles. The company's net sales stood at INR 716,904 million in financial year 2019-20, lower by 13.7% over the same period previous year. Net profit for the year stood at INR 56,506 million, lower by 24.7% over the same period previous year on account of lower sales volume, higher sales promotion expenses, and higher depreciation expenses, partially offset by lower operating expenses, cost reduction efforts, higher fair value gains on invested surplus, and reduction in corporate tax rate. Coming to quarter 4 of this year, the company sold a total of 3,85,025 vehicles, lower by 16% over the same period in previous year. In domestic market, the company sold 3,60,428 vehicles, and exports were at 24,597 vehicles. In quarter 4, the company registered net sales of INR 1,71,857 million, lower by 17.1% over the same period in previous year. Net profit in quarter 4 stood at INR 12,917 million, lower by 28.1% over the same period previous year on account of lower sales volume, higher sales promotion expenses, and which was partially offset by lower operating expenses, cost reduction efforts, and reduction in corporate tax rate. We can now take your questions, feedback, and any other observations that you may have. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question, press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Yogesh Agarwal from HSBC. Please go ahead.
Thank you. Hi, sir. Hope you guys are all well and families are safe. Just a couple of questions from me. Firstly, sir, can you talk about the treasury, your treasury investments? What is the yield you expect going forward? And if what is the profile of investments, and if there is any risk around any kind of debt funds?
On treasury, most of our investments are all on AAA portfolios, and we are very careful in terms of choosing our investments on underlying papers. There are certain negative sectors where we make sure that we do not have any investments. So far, amongst all the problems that you have seen in the debt mutual fund industry, we were not invested in any of such papers. Therefore, we've had no write-offs that we had to take on account of these underlying papers. The returns so far have been good. In fact, this year the returns were fabulous because there were significant mark-to-market gains in the investments that we have made. However, moving forward, with the interest rates going down, the accrual of next year is going to be lower, and also capital gains that we had accrued this year may not, continue the same way next year. So treasury income, to the extent of capital gains that we accrued and the lower interest rates that we are now witnessing, will have an impact on the numbers. So to that extent, the treasury income may be lower, but we do not anticipate any risk on account of bad papers, and we are very careful in terms of managing risk in these areas.
Okay, thanks, sir. And so secondly, is there some change of accounting because last quarter, like some of the stuff is moved from COGS to other income for last quarter and the previous quarter around purchase of stock in trade?
No, I'm not able to get your question. What has moved from stock and trade to?
So there seems to be some restatement costs moved from COGS to other expenses last quarter and the fourth quarter of last year.
You can just refer this question to me offline. I'll answer that. I will have to look at the details.
Okay. And so just last question I have, just big picture on demand. We all know what's going on. But you look at this year volumes, it'll be from, FY21 industry could actually be almost similar to FY11, so 10 years of no growth. So do you believe there is some pent-up demand, at least from a upgrade perspective itself, that should be FY11 should itself give the FY21 volumes? So what do you expect for starting maybe from festive season and for next year?
So Shashank, can you please take this question?
Yeah. So actually, this is a very difficult question to answer because of the large number of uncertainties which are prevailing. It is difficult to give a forward guidance of when the market will pick up. As you know, car buying is a discretionary purchase, which depends a lot on sentiment, and sentiments can be very transient. So we expect that if some good news continues on the front of COVID or any other measures which might be taken by the government or such other measures, then maybe sentiments can change. But very difficult, and I think going forward, maybe in the next couple of months would make it much clearer what the ultimate demand is going to be. Thank you.
Thank you.
Thank you. We take the next question from the line of Raghunandan from MK Global. Please go ahead.
Thank you, sir, for the opportunity. A couple of questions. Firstly, in terms of customer psychology, would you expect customers to downtrade given the mindset could be towards cash conservation? Also, do you expect a shift from shared mobility and public transportation towards car ownership?
Please go ahead, Shashank.
Yes, I think this is one of the most common questions being asked, and our interaction with customers and all possible researches, it does indicate that there would be, we expect a shifting down, what is known as the transfer of demand across segments. So the upper segments, the demand comes a little lower to the lower segment, the lower segment to further lower, and so on and so forth. But yes, that's true. It might be the trend might be towards the smaller car. Initially, inquiry levels which we have seen this month from the showrooms which have opened suggest that trend, but I think it's just too early to say that the trend is definitive. On the second question about availability of the finance, yes, given the uncertain income levels that some of the consumers may have, there would be a tendency to again put their purchase towards the lower side. Second, on the question of shared mobility, yes, I think all researchers indicate very clearly that people would prefer personal transport over public transport, and going forward we see that becoming a trend definitely as far as this fear of COVID remains. And our projection is that it is going to remain for quite some time. Thank you.
One last question. What supports confidence on sustenance of market share in light of absence in diesel vehicles and new products by competition? In this regard, can you provide any update, if any, on BS6 diesel cars or any other new products by Maruti?
Yes, so I think in the last con call also we had a similar sort of question. If you look at the trend of diesel percentage in the industry, it has been coming down. Last year it came down from about 37% to about 29% in the industry. However, if you look at figures in March and February, it is less than 15%. So the share of diesel percentage has been coming down, and one of the main reasons why this is happening is because the fuel price difference between a liter of diesel and a liter of petrol has significantly come down. In fact, if you remember, just a few days back, Delhi government announced increase in diesel prices of 7 rupee 10 paise and increase, I think, of 1 rupee or 60 paise in petrol, significantly reducing the gap between diesel and petrol to less than 2 rupees. So that, along with the initial cost of acquisition of diesel of BS6 being very high, because remember BS6 diesel, the conversion cost is much more for a diesel than a gasoline. So seeing the big difference between the initial cost of acquisition, which is now close to 150,000 for most cars, or 150 to 180,000 range, and the decrease in the difference between for the running cost, I think either way, it looks as if the diesel percentage is going to further reduce. The only segment where it has reduced, mind you, while we talk about 14-15% in February and March, actually if you look at segment-wise, in the smaller car, it is less than 5% now. It's only in the SUV category that there is, and that too in the mid SUV and upper mid category of SUV, that there is a significant percentage of diesel. But the initial demand for the new launches of the competition in the SUV category also indicates whether it's a Seltos or whether it is Hector or even Creta. It does indicate that there is a lot of traction for gasoline even in those segments. So going forward, that is what fuels our optimism that the diesel percentage in the industry will further come down. Thank you.
Thanks, sir, for the detailed answer. That's all from my side.
Hello? Hello?
Hey, nobody's responding.
Hello? Rahul?
Janice, are you able to take the next question?
Sure, sir. We have the next question from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for the opportunity, and trust all the employees and stakeholders are doing fine. So my question remains on the demand track. Just wanted to understand if you can share a broad breakdown of your customer profile, like you've already shared that close to 39% of your demand comes from rural. On the same lines, if you can just share how much of your customer comes from the government and the SOE related sector, and how many are like professionals or self-employed and the business community. So if you can just help us understand the customer profile will be great. And also, I heard you talk about consumer sentiments more than affordability while answering the previous questions. Like, so in your view, do you think that customer affordability in the current scenario is not going to take a big hit and it's more a matter of sentiment which should heal? And if so, if you can just explain a bit more about that to us, because generally the perception is that affordability is taking a bigger hit here because of the economic dislocation.
Yeah, so I'll take the second part of your question. Actually, the affordability part also is a big part of the sentiment. So it's not as if they are mutually exclusive. A lot of sentiment is obviously affected by the employment opportunity or loss of it, or the salary levels, or the loss of income otherwise. So I think these two are related, and obviously, and I think I mentioned it in one of the questions which was asked earlier, that there will be an effect of lower income levels, not only on sentiment but also on the affordability. And this was a question, this was an answer I gave in response to the question whether people will go down in terms of their the choice of the car as far as segment is concerned. So I think both are not mutually exclusive. The reason I mentioned sentiment more was because it's very transient and sometimes it has a very disproportionate effect on sales. And second, that it is also can change to the for the better, just as it can change for the worse. So that is the thing, and the reason I mentioned sentiment first was regarding the uncertainty, because it's transient and it also gives a very disproportionate effect on the sales. As regards your first question about the consumer profiling, and of course you mentioned about rural and urban division. So rural is roughly 38.5, last year was 38.5%, as against the urban of about 62% or so. So that is one way of profiling. On the other part which you asked about salaried or business or self-employed, etc., roughly I can give you the figure. Salaried is roughly about 46% of our this thing. People with businesses are about 35%, roughly 33-35. Self-employed are about 11 to 15%, and the rest about 9 or 8% are others. Others include people who are retired or housewives or things like that. And within the salaried 45%, the rough division is 50-50 for government and private. That is the customer profiling that you referred to. Of course, there are other ways of profiling, whether it is by gender or by marital status, or whether it is a first-time buyer or a additional car buyer, or a exchange, that is a replacement car buying. But I have restricted my answer to the question specifically to the salaried business and self-employed, because that's what I thought you wanted to know. Thank you.
Yes, sir. Yes, sir. Thanks a lot. And the last question is based on the upstream and the downstream. Like basically, there is expected to be a big dislocation on the supply chain side across the industry, not particular to Maruti, but you will have exposure to vendors who have exposure to other companies which may not be doing that well, and to the tier 3, tier 4 suppliers, therefore. And similarly on the dealer side, though your dealer community remains one of the most resilient. So what is your broad take at the industry level? That what is the risk to the upstream part of the supply chain and the downstream, which is the dealer franchise or the dealer fraternity? Because there's been a lot of media reports about stress at both ends after the deal of late. So if you can just share your thoughts on that, and how could it play to either to your advantage or you don't see it as a relative advantage for you going forward?
Rahul, can you take the supplier piece first, and then Shashank can answer the dealer piece?
Sure. So the upstream part, where our suppliers, we have about 400 tier 1 suppliers, about 3,000 tier 2, and an unknown 1,000 number of tier 3 suppliers. They are spread across, these suppliers are spread across mostly 9 states. And at any point of time, there are about 20 or 30 of them who fall in some kind of restriction or the other. However, with the recent speech of the Prime Minister, we are hopeful that there are signals that economic activity and industrial activity will be opened up. We are also giving confidence to the government, giving very strong safety protocols where the risk of operation and the risk of spread at the workplace is minimal. So we have some kind of optimism that these the upstream supply chain will be able to very slowly and gradually start delivering components to the plant. For our Manesar plant has started production yesterday. Gurgaon should follow suit maybe in the next week. Gujarat, there are lots of doubts because there are many cases around the COVID positive cases around the plant. So Gujarat continues to be in a doubt. So slowly and gradually we should be able to raise our industrial the level of production. However, this is subject to further spread of the disease and any further news flow that we may hear. So we'll keep updating you along the course. On sales and service, Shashank-san, may kindly brief.
Yeah, so I think regarding the prospects, the financial prospects of the dealers going forward, one of the major concern areas is of course the cash flows. Because since the lockdown, there has been no retail except that in the very recently we started opening the outlets. We have actually more than 1,000 outlets now open, and we have delivered close to 2,500 cars already. So the wheels of cash flow have started moving. But yes, going forward, this is an area of concern, and that's the reason why we have been supporting the dealers with their cash flows by way of support on their stock, and also by cash transfers of incentive, the dealer reserve funds, and so on and so forth. Going forward, I think it will clearly depend on how quickly they can do the retail, because there is part of the expense which is fixed, which includes wages and rents, and I think that is where the key is, how quickly the retails can happen. And going forward, I think Maruti Suzuki dealers are in a much better position because of the very robust business model that we have built over the years, which includes the revenue streams not only from car sales but also importantly from service, from extended warranty, Maruti insurance, finance, and accessories. I think some of these have actually flourished even in the month of April. If you see the Maruti insurance renewal, we have done from the web, in fact, more than 3 lakh and renewal, leading to income levels of almost 30 crore for the dealers. So I think the robust model which we have built over the years will be very significant competitive edge for us going forward, especially in stress situations like we find today. Thank you.
Thanks a lot, sir. Thanks a lot, and take care and stay safe. Thank you. Bye.
You too.
Thank you. We take the next question from the line of Amin Pirani from CLSA. Please go ahead.
Yes, hi. Thanks for the opportunity. My first question was on, how much digitization have you been able to build into the sales process, in the sense that what were the things that were already possible, online before COVID? What are the things that you have managed to take online, and what is the way forward? Because I guess for every OEM, I think that is the way forward. So just would like to hear, where are we placed on that journey currently?
Again, very topical and I think very often asked questions these days. Actually, we have been doing this research on consumer buying process for the last, from the point of view of digitalization for the last 3 years. And we have identified that actually from the time a consumer decides to buy a car till the time he takes the delivery, there are 27 or 28 touch points that he has to go through. Which means he has to visit a showroom, then he has to look at the brochure, he has to ask for a pro forma invoice, do a test drive, go to the bank, get the financing, and so on. So there are some 27, 28 touch points. So of the last 3 years, we have worked very hard on the digitalization. Of course, we didn't know the COVID will come. So 21 points are already digitalized. Of course, it varies, I think, from 17 to 21, depending on the level of digitalization a dealer has. But the balance which are remaining, and I think your question pertained also to touch upon that aspect, is largely the financing part and the test drive part. So test drive, of course, is something which has to be physical, and the final delivery which is physical. In between, you have some points of financing which are still not digitalized, and we are working on it. Hopefully, very shortly, we'll be able to do that as well. As regards delivery and test drive, we have now been able to schedule things digitally, but of course the actual delivery has to be physical, even if it is at somebody's home, at consumer's home, and as much contactless as possible as we are trying to do in the current COVID situation, it will still be physical. So I think of the remaining 5-6 touch points, we are on our way to digitalize four of them. Hopefully, going forward, we'll have some such bigger digitalization projects like a virtual test drive and so on and so forth going forward. This is the state of digitalization as far as Maruti Suzuki is concerned. Thank you.
Thank you, sir. And my second question is, I think, Chairman made a comment that, there has been no salary revisions as of now. I just want to understand, as far as the factory workforce is concerned, I think around 40 to 50% of that is contractual. So given that, capacity utilization remain very low and is likely to remain quite low, for the next few weeks at least, how does the, payment of contractual workers work? I mean, I'm assuming that permanent workers will continue to be paid even if there is no production. But is there a reduction in contractual workers which happens automatically? Is there lesser pay that we have to give them? I just want to understand from your cost, monthly cost, cash one kind of point of view.
So, see, the way it works is that we have permanent manpower and we have temporary and contractual manpower, and the reason why we have this is that the production has seasonality, and therefore it varies month to month, and therefore you have to adjust it based on what manpower is adequate for that particular period. So this is an ongoing thing. So whenever we have lesser production, obviously the manpower to that extent is adjusted. Now, being force majeure this time around, we had to accommodate everybody. But as we move along, the salary would total headcount will depend on what is exactly required in the factory in terms of the production. And this is not a case now. This has been the case for many years that we have been working.
Okay. And so just one last question, if I can squeeze in. I think there's an announcement on the reduction of capex also for FY21 to something like 29 billion. So if you just update us, what was the final spend in FY20 and what are the areas in FY21 where we are reducing the spend? That would be helpful.
The spend in 1920 was 3,248 crores, so 3,248 crores. And FY 2021 will be about 2,700 crores of cash flow that we're going to incur.
Okay.
Obviously, we are not sacrificing any of our long-term plans, but wherever we think that the expenditure could have been deferred, we have deferred. But no project-related plans which are long-term are being deferred. I think that's something that Chairman mentioned in his press conference also, that the focus and the confidence in the economy remains intact over a longer period of time, and therefore we will not forego something that we think is doable from a long-term point of view.
Okay, sir. Thank you. I'll come back to you.
Thank you. Before we take the next question, I'd like to remind all participants, please limit your question to one per participant. You may come back in the question queue if you have a follow-up. We take the next question from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi, team. Thanks for the opportunity. In the press release, you state that in the fourth quarter, you had the BS4 discontinuation cost. Could you share that and the discount number? And secondly, we've seen discounts have been quite high in the last 3 quarters, while visibility on FY21 is low. But how do you see discounts trending from current levels?
We are not able to hear the first part of your question.
Hi, I'll repeat my question again. So firstly, could you share with us what was the BS4 discontinuation cost in the March quarter and the discounts in March quarter?
So the BS4 discontinuation cost, we had taken a write-off of about 125 crores, which is including vendors and the stock that we had in-house. So that's the obsolescence that we had on account of the BS4 stock components that we had in the company. And on discounts, Q4 discounts were at 19,051, which compares to 15,124 same period last year.
And the BS4 discontinuation cost is in other expenses?
BS discontinuation. One moment. It's built in the material cost, so that ratio of material cost will reflect the cost of obsolescence of stocks.
Right. And just could you comment a little about how do you see discounts going ahead? At least the visibility that you have near term, because we've seen very elevated level of discounting because of one sector or the other in the last 2-3 quarters.
Shantan, would you like to take this?
Yeah. Again, as I said, this is obviously depending on the market situation. Going forward, there are some, on the supply side, there is likely to be some constraint going forward till it becomes normal, both from the supply chain perspective and production perspective. However, on the other hand, we also have about some stock at the dealership. So I think this is a fine balance currently. It all depends on how the demand pans out going forward. And that part is, of course, uncertain. But of course, I think the discount level will obviously vary from region to region, from model to model. And let's see how it goes from here. At this moment, it's very difficult to say whether this discount levels will come down or go up. Thank you.
Right. Just if one, you issued a press release on the Toyota Brezza. So the Brezza going to Toyota. Any timeline on that when does Maruti start dispatching the Brezza?
Rahul, can you take this? Rahul?
Mr. Rahul Bharti, your line is unmuted. Please go ahead, sir.
Sorry, my line was muted. Binay, we'll take this offline because for some time we've had daily management meetings, but some projects we've not been able to cover in the lockdown. So we'll answer you offline this.
Great. Thanks a lot.
Thank you. We take the next question from the line of Kumar Rakesh from BNP. Please go ahead.
Good evening. Thank you for taking my question. My first question was for Shashank. We understand it's difficult to give a near, medium to long-term guidance on demand part, but it's been around 10 days since some of your stores started opening up. How are you seeing initial trends over there? Are there higher than usual cancellations, or there are signs of pent-up demand showing up and lower than usual cancellations or higher inquiries? So how are the initial trends so far?
Yeah, so trends are, as I said, most of the people who have taken deliveries are people who have either inquired about the car or booked the vehicle because they wanted to take the delivery in March or April, but missed out because of this lockdown thing. But at the moment, I think the only because remember, it's only 5th or 4th that we started some of our stores, and now slowly the number of outlets which are opening are going up. As I mentioned, it is about 1,100 now. But I think the only trend which seems to be, as far as inquiries state is concerned, is that the demand for the lower end hatches seem to have a higher percentage, in percentage terms, a higher demand as far as inquiry levels are concerned. So it's very, very early, and therefore I'm so hesitant to talk about any patterns which we see in the demand. So also some of our markets like Mumbai and Chennai and all are a little muted because of this COVID thing. So I sorry that I will not be able to give you a clear trend, but the only trend which seems to be significant is the demand towards the lower side of the spectrum. Thank you.
Thank you. That's understandable. My next question was to Ajay.
Sir, I'm so sorry to interrupt, but may I please request you to rejoin the queue for your follow-up, as we have people waiting for the turn. Thank you. Also, before we take the next question, I'd like to remind all participants, please limit your question to one per participant only. Next question is from the line of Gunjan Prithyani from JP Morgan. Please go ahead. Mr. Gunjan Prithyani, please go ahead with your question. As there's no response from the current participant, we take the next question from the line of Sonal Gupta from UBS Securities. Please go ahead.
Yeah, hi. Good afternoon. Thanks for taking my question. Sir, just a couple of housekeeping questions. First, wanted to get a sense of what is the royalty rate for the quarter and what were the export revenues for the quarter?
The royalty rate was 5.4% for this quarter. Largely because the exchange rate was unfavorable by the end of March, so that's the reason. But for the full year, royalty is at 5.3%. Export realization this quarter was at 1,119 million rupees. So, crores, sorry, 1,119 crores.
Okay. And sir, Mr. Srivastava, sir, just wanted to understand how, like for FY20 as a whole, how have we seen the movement in first-time buyers and what percentage of demand is actually coming from first-time buyers, and just if you could throw some light there.
Yeah, so first-time buyers actually have remained remarkably consistent across the last 10-12 years actually. So in the industry, it is roughly varying between 45% to 47%. Yeah, for Maruti Suzuki, it is a little bit higher, but it has remained remarkably consistent.
Okay, sir. Great. Thank you so much. I'll return back to you.
Thank you.
Thank you. Next question is from the line of Ronak Sarda from Systematic Shares. Please go ahead.
Hi, sir. Thanks for the opportunity. The first housekeeping question, the other expenses line item looks to be significantly higher. In fact, there is a quarter-on-quarter jump in absolute amount as well. Any one-off there or?
There's a little bit of regrouping that has been done. The royalty that's paid by SMG, it used to be part of diesel cost. Now that's regrouped in the other expenses as part of royalty. So I think that's the regrouping change. So royalty now gets aligned in terms of both SMG and MSI. So the increase that you are seeing is because of this regrouping.
Sure. And that has been done across the 3 quarters which are presented this time?
Yes, that's right.
Okay, sure. Thanks. And the second question is on the new launch pipeline. Given how the demand scenario is, what's the kind of new launch pipeline we are thinking of right now? Any delay there? And secondly, there are a lot of news items on Suzuki Jimny, which is supposedly to be manufactured in India. Any response there?
Actually, I'm sorry, we don't give forward guidance on our product plans. However, one thing which we have already talked about at the Auto Expo, we were to launch the BS6 petrol S-Cross in March, which because of the lockdown has got a little postponed, as you know. So apart from that, regarding the Jimny, I will not be able to comment. We are not allowed to talk about give forward guidance on product. Thank you.
Thank you. Well, ladies and gentlemen, that was the last question for today. On behalf of Maruti Suzuki India Limited, we conclude today's conference. Thank you all for joining us. You may now disconnect your lines. Thank you.